Hello there everyone, and a very happy new year to you, 2024. What will it bring? Well, today's video is all about my kind of wish list of where I would like certain things to go, where I think certain things are going to go in the tax world. In fact, I've been meaning to do this video for quite some time, hence the title of the video, 12 Days of Christmas. But I've been so busy that when I wrote this in the 12 Days of Christmas, I didn't think that I would be posting this video in the middle of January. Anyway, here we go. Let's just dive in and see what are my predictions. What would I like? Let's have a look. And please do remember to leave your comments what you think of these 12 ideas. So the first one, IHT. Be great if the government abolished IHT. What do you think? Well, it was rumoured that was going to happen in the autumn of 2023, before the autumn statement. It hit the press, all the Sunday papers. Now, normally that's indicative of what will follow in the actual Chancellor's pronouncements, but it didn't happen. There was silence on that. Now it's started to come back and make a few noises again, that will indeed happen in the spring budget in March 24. So who knows? Interestingly enough, the statistics show that only 4% of people pay IHT, but 30% think it could happen to them in their lifetime, or rather at the end of their lifetime, it's going to affect their family. So way more people think it's going to be a problem than it actually is. But why not just get rid of it? You know, you strive so hard and work so hard all your life to be paying death duties. It's the final smack in the face. So I would like IHT to go. Let me know what you think. Number 2, SDLT. SDLT is so hard for the younger generation these days to get on the property ladder. Why not shift SDLT from buyers to sellers? Now, before all you sellers out there start throwing things at me at the screen, but it makes more sense because they're the ones who are flush with cash, for want of a better phrase. You've sold your property, you've got the money. Make stamp duty, if you're going to keep it. Again, it's such an archaic thing. There's a good argument to get rid of that. But if you're going to keep it, government, Mr. Taxman, shift the burden from the buyer to the seller. Make it easier for first-time buyers, for the kids these days to get on the property ladder and move up and swap it, buyer to seller. So that's number 2. Number 3 in my predictions, my wish list, income tax. Now, national insurance. Many people think, you pay into national insurance, it goes into a separate pot that somehow looks after your pension or goes to the NHS. No, it doesn't. It all just gets lumped into one big pot. And to all intents and purposes, national insurance is just another tax. So why don't we merge? Why don't we merge the two together? Income tax and national insurance, just call it income tax. I know politically that ain't going to happen, but I wish it would, because all of a sudden you're going to have a tax rate from 20% going up to 30%. It's already that now, but people don't realise. I mean, we are getting taxed so much as a percentage of GDP and everything else, but that's by the by. That's relativistic terms over the last 70 odd years, when we're now at percentage-wise of GDP, taxation about 37%. It goes up and down, but national insurance has always been there. Why not merge it? You've got practical problems why you wouldn't merge it, because there are certain income streams that attract income tax which don't national insurance, like dividends. So particularly, millions of pensioners out there receiving dividend income don't pay any national insurance. All of a sudden you're going to merge the taxes and they'd have a great big tax bill. So lots of things to think through, but conceptually, why is there a separate thing called national insurance? And especially given the recent abolition of Class 2s as a contributory benefit for the pensions, the state pension. Look, just make it what it is. One big tax, income tax. Okay? I don't think it's going to happen. Let me know what you think. Number 4 on the list, pensions. So, good thing that happened, was it last year or the year before, when the government said lifetime allowance, the arbitrary cap at which you can have tax-free savings, and then if you start to take your savings, if they're above that £1 million, you get clobbered for tax. They abolished that, predominantly to get a lot of the people back in the workforce who'd retired early, in the government's view, during the pandemic, like many thousands in the medical profession. So to entice them back in, they said we're going to abolish the lifetime allowance. So all those lovely pensions that you got, you're not going to get clobbered when you come to take them. And then Labour straight away that day more or less said, well, if we get in, we're going to abolish that and bring back the lifetime allowance for pension. January 2024, it's looking more likely that Labour will get in, and if they do, I really hope they don't reverse this LTA announcement that the Tories have got in now with abolishing the LTA. So fingers crossed that the LTA will go and remain. It'll go, so there's no lifetime allowance. But if Labour get in, they've said they're going to restore it. I hope that they don't, if they do get in. Right, number 5. Non-dom. All this hoo-ha about non-dom. I don't really care about non-doms. The fact that they have tax favourable status. Because look at all the good things they bring. They bring their entrepreneurial nous and their knowledge and all their wherewithal to the country, employing often thousands of people, setting up enterprises, building empires, contributing vast swathes of taxes to the economy, PAYE, income tax of the workforce, VAT, and yet, so for them personally to not pay any UK tax on stuff that they've earned overseas, I don't really care. The stuff that they've earned in this country, they're paying tax, great. What do you think? But personally, I can see the argument for not taxing them too much, or they'll just set up elsewhere, and we'd have a brain drain of talent, because it's often the non-doms who have got so wealthy because they've been so successful, but that success has not been so narrow that it's just them. They've built great empires in this country and contributed massively to the economy. So me, personally, I'm indifferent about the government or whoever gets in, Labour, if they want to get rid of the tax-efficient tax breaks for non-doms. I hope they don't. I'm pretty comfortable with non-doms having those reliefs. I've got no vested interest in them. I'm not a non-dom myself, but for that reason I've just given, leave it as it is. Number 6, CGT. Now, for many years, the CGT, capital gains tax rates, have been a lot lower than income tax rates, and so people have contrived different ways to turn income into capital, basically. Now, that's easier said than done. I mean, often, when you dispose of something, it's an asset. And when you earn something, it's an income. But yes, there are certain things out there where conceptually you could try and dress income up as capital. Anyway, the government have kept these disparity in the rates. Income tax as high as 60% if you're in that dreaded zone above 100 grand of earnings. Capital gains tax as low as, well, actually it's as low as 0% if you sell your company to an employee ownership trust. So there's a big difference between 0% and 60%. It's been touted for a long time that maybe the government, if it's not this one, the next one will increase the rates of capital gains tax to make them more aligned with income tax. Again, I hope that doesn't happen. So number 6 on my wish list for 2024, that there will be no hike in the capital gains tax rates. Coming in at number 7, another CGT. People ask me this all the time. And it comes back to inheritance tax and the fairness and passing on wealth to the next generation and getting the kids on the property ladder and everything else. What if I gift a property to the kids? Have I got to survive 7 years to escape inheritance tax? Yes, you do. But actually, there's also another tax in play. There is potentially capital gains tax. Even if you are gifting a residential property to one of the kids, you've got immediate capital gains tax. If it's commercial property, then there's a thing called gift relief, various things where you can defer. But basically on resi properties, you can't do that. So I know for a fact there are so many people out there who would love to give a property, just give it to the kids. But they can't because of the capital gains tax implications. And I would hope that someone in the government takes this on board and says, look, we've got a whole problem here with the housing and this generation, the younger generation not being as well off as the older one. And it links into points number 1 and 2. It's all about the SDLT, shifting the burden, no inheritance tax, gifting properties tax-free to the next generation. I would love to see something on that. Will it happen? I don't think so, but there you go. So, number 8, R&D. R&D, great relief for innovative companies who are coming up with some way to overcome technical uncertainties. It's been around for about 25 years. Unfortunately, as any sort of tax break is, really, people have been abusing it, and so the government have curtailed it somewhat. This year, there's also a radical overhaul on how the regime will work, because historically there's been two different types of regime, one basically for small companies and one for big companies, although actually there was not anything to stop the small companies using the big company scheme, but now the government said let's just combine the two. So now from this year there is a new mechanism for companies to claim R&D. I just hope the government just doesn't keep changing and changing like they have done with capital allowances. So let's have some consistency, which we know where we are, and we can play by that set of rules, and there's certainty for taxpayers. Okay, so number 9, CT, corporation tax, was 19%, and the level of trajectory was lower. Boris wanted to get it down to 17% when he talked about turning London into the Singapore of the Thames. Great idea from a tax point of view, but unfortunately COVID came along and we had that 500 billion hole in the finances that we had to plug. And unfortunately, one of the ways that the governments chose to fill that gap was by increasing, not decreasing, corporation tax. And now, from 1st of April last year, so it's been in about 9 months, 25% is the headline corporation tax rate for profits above a certain level, which will affect many SMEs, because you only need to earn above 50,000 profit, and that 19% creeps up towards the 25. So my wish for 2024 in at number 9 is that in the spring budget, and I don't care if it's part of electioneering, any excuse to do what I would like would be a good one, is that the government say, do you know what, we're going to bring down that corporation tax rate back from 25% closer to 19%. That would be terrific. That would help hundreds of thousands of small businesses that haven't felt the benefit of the increase in the capital allowances regime that the government brought in to appease the FTSE 100 boys who were having to pay 25% instead of 19% by writing off tax relief on all the millions and hundreds of millions of expenditure on fixed assets. SMEs don't have that. They don't spend that much money. So it's a real cost to them having this increase in corporation tax. Let's hope it comes down. So, number 10, VAT. Now, we're not in Europe anymore, so we don't actually need to charge VAT. But that ain't going to happen. It's not going to be abolished because it brings in about £130 billion a year. But what we can do is create our own set of rules around VAT without having to go to Brussels every time we want to tweak something, because that was the way it was for 50 years when we wanted to say, well, let's make children's clothing zero rated. We had to ask Brussels permission. Or when we wanted to put 0% on new build homes, go and ask Brussels. Now that we're not part of the EU, one of the good things that happened because of Brexit, we're free to choose our own VAT rules. So why don't we do some more 0% for certain areas, certain industries that need targeting? So we could help out struggling parts of the economy by making the VAT lower for those types of businesses, whether it be reduced rate or zero rate or whatever. We are totally free to do whatever we want with VAT now for the first time in 50 years. So let's hope something good comes out of that freedom. Now, number 11. What am I saying at number 11? Fiscal drag. I think a lot of people know about fiscal drag. This is the point at which basically people's salaries go up via wage inflation, but the tax bands stay static. So, for example, the higher rate of income tax to go from 20% to 40%, so your tax rate doubles, is just over 50,000. But that limit is going to be capped in legislation. It has been capped for the next 5 years, but wages are going up all the time. So the point is that hundreds of thousands, if not millions of people will go from being basic rate taxpayers to higher rate taxpayers. And the higher rate tax, the rationale for bringing in higher rate tax way back when was not to target the type of people in society who will now be hit for 40% tax. And it's a bit of a political hot potato as well. So I hope that the government, maybe as part of the spring budget before the election, and again, I don't care the reasons for doing it, as long as they do it, I would like to see a increase in those personal allowances, or rather not them be frozen, but rather they go up in line with inflation or wage inflation to match the earnings of individuals. That would be a sensible thing to do. Hopefully announced in March 24 in the budget, alongside reduction in corporation tax. Wishful thinking? Who knows? Let's see. It's only a couple of months away. And last but not least, on my 12 days of Christmas, my 12 tax takeaways wish list for 2024, better response times from HMRC. HMRC, pretty good. Give them the credit where credit's due on automated things such as tax returns, filing stuff. If you've got a refund due on your tax return, you put all the information on, chances are you're going to get your money back fairly quickly. But God forbid you've actually got to write a letter for whatever reason. You've got to write a letter to HMRC, and it could be on anything. Often you might not hear a reply for 6 months or 9 months. I mean, they are that short-staffed. So tip for the day is try and do everything you can automated. But if you do have to write a letter, you're in for a long wait. That is not acceptable. And all sorts of accountancy bodies have kicked off saying, look, HMRC calls the taxpayers the customers, so it's not good customer service. They should be doing better. So let's hopefully, please, 2024, Mr. Taxman, get your staffing in order to turn around correspondence a lot quicker. And that also goes for the helplines as well. Many of you will be on the phone to HMRC waiting an hour to speak to somebody. It's just too much. It's too much. It needs to be better allocation of resources at HMRC. So they are my 12 days of Christmas. I'm going to do this video a while ago, but my 12 tax wish lists, what may happen, what I'd like to happen, what I think will happen in 2024. But as always, please do leave your comments. What do you think about any of these? If you like this video, please do subscribe. And as always, I'll see you soon.